श्री नरेंद्र भाई मोदी जी द्वारा शुरू की गई।
Good morning, ladies and gentlemen. Welcome to Market Today on Business Today Television. I am Shail Bhatnagar joining you from the capital, New Delhi. It's a lovely morning here, at least in the capital. Very fine weather, and the similar weather is seen on Dalal Street these days. It's the weekly expiry day for the Nifty today, and over the last three trading sessions, the index has gained somewhere like 1.4%. We'll share a lot more details on this exciting day when TCS earnings will be discussed, and the company has also announced a 17,000 crore buyback at a 15% premium to its stock price. Meanwhile, let's look at the main headlines. India's largest software services provider, Tata Consultancy Services, saw its second quarter profit after tax jump 8.7% year-on-year to 11,342 crore rupees. This is better than estimated. TCS's board approved a buyback of 17,000 crore rupees at a price of 4,150 rupees per share, representing a 15% premium on yesterday's closing price. This is TCS's fifth share buyback in a span of 6 years. Meanwhile, Indian stocks are likely to pause and consolidate on Nifty's weekly expiry day, that's Thursday, as traders digest a sharp three-day rally in which the index has risen 1.4% so far. Overall sentiment favors bulls on Dalal Street, with the Nifty at its highest so far in October's monthly F&O expiry. Good morning once again, ladies and gentlemen. It's a fine day to look at markets. Lots of cues moving around, among them the most important one being TCS's second quarter earnings that came after markets shut shop on Wednesday. The earnings, etc., are fairly good, but it's the buyback price and the quantity that seems to have disappointed investors. We'll discuss this in a lot more, but let's first look at what the Nifty is most likely to do. Right in front of you, you will see a daily chart of the Nifty as also the change. We added 121 points yesterday, 19,811. Remember, the Nifty opened a gap up for the third day in a row, and from there on it consolidated. It didn't add much in yesterday's trade as far as post gap up is concerned. This is the daily chart for you. In the last three working sessions, the Nifty's added somewhere like 320 points from a low of 19,480 to about 811 as far as Wednesday's close is concerned. Shortly you will see a chart in which I have earmarked three 15-minute periods on the screen, and you will see that each day the Nifty opened gap up, built up further strength, and closed somewhere near its day's high. Because we have the weekly expiry today, the trend is likely to be consolidative in nature. That means the Nifty will digest the gains over the last 3 days, and then probably let's see what happens somewhere like 3:30 when you have the end of expiry move. So that's as far as Nifty is concerned. Let's dig a little deeper as far as the fundamentals are concerned. There are 3 or 4 important developments that help bulls on Dalal Street. One, crude oil prices have dipped fairly sharply, 1.7% lower. Remember, they were on the boil over the last 4 or 5 trading sessions because of the problems in the Middle East. Secondly, the US 10-year bond yield has slipped about 10 basis points. That's positive for bulls again. And the fact that you have a lot of smart rallies happening in PSU stocks, that improves the general market sentiment. Midhani yesterday was up 10%. You've seen metal companies like NMDC, MMTC, MSTC all shine brightly. So the sentiment across the board, whether it's railway stocks, whether it's defense plays, whether it's banking stocks, is fairly positive, and that's reflected fairly strongly as far as oil, as far as Nifty is concerned. The other thing that happened yesterday was a very smart short covering that happened in the money calls as far as Nifty is concerned. If you've been with us for the last 2 or 3 trading sessions, we've arranged a call ladder for you. We first discussed 19,500 call. Once it went up, we clambered onto 19,600 call, and in yesterday's trade we were at 19,800 call. So that's how the options chain works. And what is good news is that within the chain we've seen the Nifty support level rise to 19,700 to 19,750. And what's more interesting is day before yesterday 19,800 opened up, and you've seen 19,800 be the close as far as markets are concerned on Wednesday. Now 19,950 and 20,000 have opened up on Nifty options charts. So that basically means that you are already looking at fresh highs coming into the system as far as the monthly expiry of October is concerned. Nifty is already at a fresh October high, and the all-time high seems to be in sight. So that's how Nifty is a consolidative trend in which sentiment favors the bulls on the Lal Street. Any dip towards 19,700, 19,750 seems to be favoring the bulls, but that should be done in the next weekly expiry. So that would be October 19th if my data is right. Yes. So if you wish to take or continue a long position, you can shift from 19,800 call for October 12th to 19,800 or 900 call in the month of in the week of October 23rd. So that's how the Nifty is for the moment. Let's look at other interesting data that has seen the Bank Nifty also rally sharply. You will get the Bank Nifty in front of you. Over the last 3 trading sessions, remember, it had tested a low of August 18th on Monday, and that low was 43,800. So from that low, over the last 2 or 3 trading sessions, the index has surged all the way up to 44,710. So that would mean a rally of somewhere like 900 points. Now at the moment, the Bank Nifty is fairly above its 100 and 200 DMA, which acts as a strong support level, and at the moment it's the 20 and the 8 EMA that seem to be acting as resistance as far as the Bank Nifty is concerned. We'll also pay a little bit of attention on Bank Nifty's options chain. Remember, Bank Nifty expires on Wednesday. So at the moment you see a very strong support emanating at 44,500 and then at 44,000. Remember, Bank Nifty jumps fairly sharply on an average. There are about 500 to 700 day intraday ranges, and a fresh resistance is coming in at 45,000 levels. So this is the view as far as the Nifty and the Bank Nifty are concerned, both of them showing fairly strong traction when it comes to action on the long side. Let's also at this point of time pay attention to a couple of stocks in the F&O space, and I am looking at Exide Industries. It's a battery maker that's doing phenomenally well on the charts. The daily chart is there in front of you. Remember, Exide is one of the huge outperformers that we have seen on an annual basis in the auto space in F&O. At the moment, if you see Exide's statistics, the counter ended 1.6% higher after a very long consolidative phase. If you see the screen in front of you, the stock's done pretty much nothing over the last 1 month or so, and we've seen a fresh move coming in yesterday as well, and a consolidative phase that seems to end. So 1.6% is what the stock gained yesterday, and let's look at other parameters in the form of open interest as well as delivery statistics. So open interest rose somewhere like fell actually 2.1%, which actually means that there is short covering happening on the counter, and the delivery statistics were 48% higher on Wednesday compared with Tuesday. So that's the statistic when you look at Exide, and this is something that you need to look at. Remember, Exide has been a very sharp outperformer on a 1-year annual basis. It's the top gaining F&O auto stock, and that has risen somewhere like 69% over the last 12 months. So that outperformance seems to coming back as far as charts are concerned. So that's how the Nifty and the F&O look at it. At the moment, we have Vineet Bulinchkar, Head of Research at Ventura Securities, joining us, followed by Mr. Rajesh Palvia, Head of Technical and Derivative Research at Axis Securities. Let's first touch base with Vineet. Good morning, Vineet. At least the weather in Delhi is fantastic, as also it's on Dalal Street. One, how do you look at sentiment on weekly expiry day? And then we'll discuss TCS further.
So the sentiment continues to be good. I think it's going to be dampened today morning by the TCS numbers. We choose to remain underweight on the stock. And going ahead, I think all the other IT stocks will also be kind of soft to a little negative. The takeaway from the broad Infosys deal is that the dividend and the buyback should hold the price. And the price at which they're doing the buyback at 4,100 is a very encouraging number to that extent to the shareholders. So shareholders who hold the stock should definitely tender their shares into the buyback.
Fair point. Let's look at the daily chart of TCS, which should be on your screen. Remember, the counter closed a bit lower, somewhere like 3609, and if you look at the all-time high for the counter, that's somewhere like 4004. This was stuck somewhere in March of 2022, and after that we've seen global slips as far as the IT sector is concerned. Demand has been tepid, and over the last 3 quarters TCS has sort of been in a shade which generally does not remain as far as TCS is concerned. It slipped to 2900 rupee levels, and then 2900 was somewhere in September of 2022, and from then on we have an uptick of about 3609. The buyback price, Vineet, would you want to comment on that?
I think it's a very reasonable buyback price. It is sufficient to entice people to submit their shares, tender their shares rather. And I think as we spoke, I believe that investors should tender their shares.
Okay, fine. This is the 5th buyback for TCS that has been announced in the past 6 years, and those cash-rich companies that see their businesses flattening for whatever global reasons which are temporary often offer this kind of relief to long-term shareholders, in which they buy out a lot of floating stock, reduce the number of shares, and automatically the EPS goes up, also pushing up the stock price higher in the longer term. Vineet, is there anything that you found negative in the earnings that TCS announced post market hours yesterday? Of course, at 9:30, the management would be joining us.
No, I think the result was in line with our expectations that the numbers would not be that great in terms of growth. 2.8 constant currency growth is not exactly spectacular because you're looking to get to double digits. But the book to bill ratio at 1.6 is very encouraging. The 14.9% attrition rate shows that it has become steady. And nearly 1/6 of their workforce, which is about 100,000 workers, are generative AI programming ready. So that is a couple of the other things that I found interesting. Also, they have managed to maintain a 24% ratio for the EBITDA margins, which is also a very positive sign.
Cool. Let's see how the stock reacts to in today's trade. We'll have the pre-opening shares in front of us fairly shortly. It's already 8:47. Apart from TCS and the fact that it might mute a very strong sentiment on the Dalal Street, Vineet, what else interests you in today's trade? Any stocks in particular that you're looking at?
So I think the energy stocks are going to be in focus. They are, as we speak, marginally trading weaker. Yesterday, oil was down a bit, but I think that's the lull before the storm, and we expect these rates to firm up as the situation in the Middle East continues to evolve. It's not going to die immediately. It is going to be a protracted affair, and there are far too many stakeholders getting involved, and it's not looking very. The build-up is not looking very encouraging, if I may say.
Yes, I think that's a sentiment at least shared by long-term watchers of equity as well as crude oil, Vineet. But price is price, and you've seen the Nifty sort of retest 19,480, 19,500 several times over the last week, and from then on we've seen a fairly sharp uptick at 19,800. Given the fact that it's October and the festival month, there are lots of very strong voices backed by deep money which are looking for a fresh high when it comes to the index. Be that as it may, it's always better to be cautious and have some powder dry. So when those dips happen, you would probably like to add some stocks. The auto space, Vineet, it being the festival season, and the fact that auto has been a very sharp outperformer when it comes to the rally that we've
Yeah,
seen from
so
April
we
till
think that
October.
Maruti's.
Any?
So I
Yes,
think
sir.
Maruti looks very interesting.
Please continue.
The stock has not really done too much if you see over the last one quarter, despite healthy numbers. And we are quite positive that the festive season is going to yield dividends for the company. And we see strong growth numbers come. And that should be reflected in the price moving higher. So we are expecting that, the stock is settled quite nicely above the 10,000 level, which was a psychological barrier. And from here, the stock should gradually keep inching up. And our target over the next 24 months is for 14,000, which is offering you a good, 38% growth from the current numbers.
Fine. We have the Maruti chart in front of you, and the counter shut shop at 10,452 yesterday. Remember, this is fairly close to a record high, and we need to point to the fact that nothing much has happened over the past 1 month or the 3 months. It's appreciated just 5% in the past quarter. When you look at stocks like Escorts, which have risen 47%, and Bharat Forge, which has gained 30%, or TVS Motors, which is up 15. Yes, Maruti has been a relative underperformer, and 14,000 is the level at which Vineet sees Maruti at. Vineet, what would be the time frame for this kind of a bullish scenario? The companies, of course, announced
I think 2 years,
45,000 crore rupee expansion.
So we are looking at 2 years, and our logic for this is
now.
Yeah.
Please continue with your logic, sir.
Yeah, so the logic is very simple, is that the company is taking a 1,25,000 crore capex plan, and all this will be executed through internal accruals over the next 5 years. So, the cash on the books, which is there, which is very large, it's over 40,000-50,000 crores, will relatively remain untouched. And this unproductive cash as a percentage of the size of its balance sheet is going to really come down sharply over the next 5 years. And what will result from this is the fact that, the return ratios will improve. We are expecting top line to grow quite nicely, and we are expecting operating leverage to continue to kick in. Margins will be maintained, and we are expecting doubling of the net earnings by 26.
Fair point. And this doubling is happening on fresh volumes that are likely to kick in. Of course, if you go and buy a car, at the moment there is a 3 to 4 month waiting period for at least models that are top selling. That takes care of auto as far as markets are concerned, and Vineet's views are. Vineet, how about the rally that we are seeing in stocks like GMDC? It rose 19% yesterday. Day before yesterday. Yesterday was the move
So,
on Midhani, that's Mishra Dhatu Limit.
yeah.
Yeah, please continue.
So, yeah. So I am of the belief that the PSU rally will continue to play out. We believe that they're getting unshackled from their bureaucracy because of uh, the kind of stress that is being placed on these companies. So let me explain a couple of things that are happening. Is that I've been in touch with the several companies for research, and what I found is that when the replacement in the top management is about to take place, the best available talent within the company is being promoted to that level. So what is happening? There's a lot of encouragement the to the employees to perform well, and when you're putting your best man in the leading position, who's a go-getter, aggressive, understands the business very well, I think a lot of the latent potential of the companies is going to get extra collated and brought to the fore. So I believe that strong leadership emphasis is leading to the fact that these companies are going to do well. We have seen the defense pact do well. We are seeing the others also join the fray, and I believe that one of the dark horses out here is going to be BHEL. GMDC has also gone off for the same very reasons, and so has Mishra Dhatu, because the outlook is very good. The people who are now leading the businesses are very pro business, and they're go getters, and all these giants, with latent potential, are suddenly becoming alive with a lot of zest and energy.
Fair point. So BHEL is one of the stocks that Vineet hopes will perform or outperform as far as stock prices are concerned. Let me just tell you what BHEL has done over the last quarter. It's up about 39%, and if you see the 1 year performance, it's the top performer in the capital goods space, up somewhere like 110, 112%. The share actually closed at 131 rupees yesterday flat. That takes care of capital goods. We need anything that catches your fancy in the small cap banking universe, which is really sparked a rally. The likes of Federal Bank, City Union Bank, Tamil Nadu Mercantile Bank. What looks good to you?
I think Catholic Syrian Bank, or CSB, is a very strong bank. They have got a 25% CAGR growth in AUM, and all their other measures are very strong. So I think that is one bank which has not really participated in the rally, and this is one that should do well going ahead.
Okay, so this is one stock that is actually attracting a lot of long-term funding as well. CSB Bank, the all-time high, if I remember very correctly, was somewhere like 374, which we saw in July of 2021, and as of now we've seen 362 as a fairly close number that's come to that level. And if you see the long-term charts, there is an imminent breakout on the charts due. Well, that's banking for you as far as Vineet is concerned. Vineet, what about metal counters? We are seeing some kind of move happening on NMDC, the counter up at 150.75. Since this is also a PSU stock which hasn't really participated in the rally, would you have a view on NMDC?
Yeah, so I think that the prices of iron ore are started to picking up, and NMDC is India's largest producer of iron ore. So definitely this stock should benefit. Along with this, I think Godavari Ispat and Power, and Lloyd Metals should also be doing well. In fact, over NMDC, we prefer Lloyd Metals because it has got a lot of potential yet, and we are expecting that the stock will touch the 4-digit mark from current levels over the next 6 to 8 months.
This is the 594 rupee stock,
Yes.
Lloyd's Metals and Energies. Is it Vineet?
Yes, we have it under coverage, and we have a stock price of 1,000 over the next 12 months. But I expect it to happen. Not Lloyd Steel, it's called Lloyd Metals. Lloyd Metals is the counter.
Yeah. Yes, of course. Since it's listed only on the BSC, it takes a while for us to sort of take it out. We've seen the most recent high at somewhere like 680, 681 in the month of August, and it's been a sideways to flat trend ever since then. What attracts you to Lloyd's Metal and Energy, Vineet, that you see the stock appreciating somewhere like 80-85% within a year?
So, over the next 6 to 7 years, they have got very, very strong capex plans. Almost 23,000 crores of capex they are going to undertake. And mind you, all this is going to be generated from internal accruals. So, and the company, if you see last year, barely did 1,000 crores of PAT. They had actually a special expenditure because of which their numbers were subdued. But I think as the numbers flow over the year, the stock will tend to get re-rated, and I'm expecting that the numbers will catch up and the stock price will also perform.
Fair point. So it's the capacity expansion fueled by a very, very strong balance sheet in Lloyd's Metal, as also Maruti is what is attracting Vineet. These are classical research theories which work out very well in a zone when markets and the economy are in an expansion phase. And Vineet's picked one for you in the metal space, Lloyd's Metal and Energy, and of course India's top car maker, Maruti. So that's how it is. We'll wait for the pre-open trades to open, as also we'll be welcoming Rajesh Palvia fairly shortly. He's the technical and derivatives head of research at Axis Securities. Remember, yesterday was a very, very strong third day of a rally. The Nifty opened fairly strongly with a gap up of about 80 points, and the prices are right in front of us. Okay, the pre-open trades are fairly strong. 19,900 in front of you, up about 63 points at the moment as far as the Nifty is concerned. A fairly strong opening. Let's see how it pans out. Remember, it's weekly expiry day. It's moved dramatically into the red, now down 40 points, 19,760. Meanwhile, let's look at prices. I want to see what HDFC Bank is doing. Down 1.5%, 1518. How about Reliance? Down 1.9% at 2320. Remember, these prices will sort of correct at the moment. The initial 1 or 2 minutes are really volatile in pre-open. Let's spend time on TCS. Down 2.5%, 3525. Let's see how it stabilizes. From the looks of it, as Vineet mentioned, the markets are not so happy with the quantum of the buyback, as also the buyback price, and the fact that earnings have been fairly tepid. Infosys up 0.5%. Remember, now it's the turn of Infosys, HCL Tech, and Wipro and the other smaller software companies to come up with earnings after TCS. So the trend is set. Let's look at other stocks. Axis Bank, 1,034, 1.5% higher. Let's look at ICICI Bank, 960 in front of you, 0.7% higher. Let's relook HDFC Bank, now down just 1%, 1524. How about Reliance? It's settled, 2315, still down 1.2%. What's in the green as far as the top line is concerned? It's Axis and ICICI Bank. So it's most likely to be a banking day. Let's immediately turn focus on how stocks are moving beyond the index heavyweights in the F&O space. Just give me a moment. It takes a while to load the sector. Okay, ladies and gentlemen, as far as F&O is concerned, it's MCX, 2.5% higher, 2210. Aurobindo Pharma, Zydus Life amongst the top gainers, as also Glenmark Divi's Lab. So we have one sector coming up which is pharma on the green side. Aurobindo Pharma 2% higher, 918. Divi's Labs 3817, 1.7% higher. And yesterday's top gainer was Idea Cellular in the F&O space, up 2%, 1210. So fairly strong moves coming in here. Let's shift focus immediately to NSE 500. Remember, these are early stock prices, lots of volatility that's coming in. Let's look at the top gainers here. Well, MMTC 10% higher at 65. Let's look at other metal stocks which are fairly in the green. Ratnamani Metals 2673, 2% higher. Glenmark 1.8% higher, 795. So these are initial price ticks that are happening. Nifty is now back in the green, 19827. Remember, it's the weekly expiry day and the index is up 13 points. Vineet, would you want to comment on MMTC?
We don't track that stock, so it's very difficult for me to comment on that.
No harms, no harm at all. Welcoming Rajesh Palvia, the technical and derivatives head at Axis Securities. Namaste Rajesh ji, welcome to Market Today. And I'd just like to take your view first on the sentiment that you see on the Nifty, and where do you see the index say in the medium term at the end of October, and then we'll discuss your picks. Welcome and good morning.
Good morning, Shailji. Good morning, everyone. So trend is set to scale up for new all-time high trajectory also in the October series itself. As we have seen, Nifty has formed a base at around 19,500 in last couple of trading session, and in last two trading session we have seen a strong short covering action is taking place in the market. Almost now we are comfortably holding about two major call concentration area of 19,600, 650 zone. So most of the monthly, weekly call writers are now on the back foot, and now they have shifted their position to 19,800, 19,000 and 20,000 strike. So I think the supply zone is now shifting on the higher side. And looking at the other side, put concentration is now adding up at the 19,500, 600 zone. So that clearly shows that base is now moving further higher. So if we look at our market in isolation, if we ignore geopolitical issues, so I think our market is very well poised for scale up to the new all-time high. So we are very optimistic to see the new all-time high in the October series, and I think this continuation, this uptrend is likely to continue further, and we can see a level of 19,900 to 950 in very short period of time. And I think if we hold 19,800 level in today's session, then possibly we can see a expiry for this option expiry is around 19,880 zone for the Nifty. Bank Nifty is also holding up ground, and 44,400 is now important level to watch for. If at all we hold this level 44,400, then possibly we can see another round of short covering in Bank Nifty also, and possibly 44,800 to 45,000 could be the possible upside range we can see in the Bank Nifty also. So your stop loss for Bank Nifty should be at around 44,100. Until these levels are intact, I think there is no worry in terms of trend of market on the bullish side.
Fair point. And Rajesh ji, if it were old times, I would have sent ghee shakkar to you if you are also looking at an all-time high as far as the index is concerned. Let's discuss a couple of stocks. What looks good to you on the charts?
So I think first stock that we are focusing is Dixon. Very strong buying action since last couple of trading session. It's a third consecutive day we have seen that stock is forming higher high-low formation, and stock is now looking to cross its previous swing high. In the last session, very strong buying action was there. So I think Dixon Tech one can look at to buy. We are projecting target of 5350, 5400 in the continuation of this uptrend. One can keep a stop loss at around 5210 to buy Dixon. Another stock is from the pharma space that you have already discussed, that mentioned that we are seeing that a lot of traction on the pharma space. Aurobindo Pharma is looking very promising, and I think if stock holds above 900 level in the today's session, then possibly this stock can show good uptick towards 930, 935 zone. One can buy this stock with stop loss of 882 The third stock is from chemical or agrochemical theme, that is UPL. After a decent corrective move, now stock is recovering. Stock is now holding above 50-day moving average. Short covering action was there since last couple of trading session. So we expect that UPL can scale up to the level of 650, 655. One can buy UPL with stop loss of 618.
Right. UPL, of course, is a nifty stock and has been one of the rare underperformers in the index, although at 628 as of now. If you look at the 1 year performance of nifty components, you'll see you'll see UPL actually performing a negative 6.8%. There are only two stocks in the nifty which over a 1 year period have given negative return. One of them is UPL, the other being, of course, Adani Enterprises. So this is a swing trade in the making. 580 was the most recent low that we saw on UPL, and from there on, value buyers as well as technical experts have been recommending an uptick. This was the lowest that you saw UPL hitting from 2021 April. Vineet, would you have a view fundamentally on UPL?
Past, and I think the fundamentals are expected to pick up. We believe that going ahead, the the stocks in the sector in which it operates are going to do very well. And UPL being the largest global play, staples are India. I think the stock should do very handsomely over the next few years.
Fair point. Rajesh, I would be failing in my duty if we don't discuss TCS. A buyback of 15% premium at 41.50. What are the charts telling you? This is one of the rank outperformers in the large cap space in the Nifty.
So I think, Shailji, near-term price movement will be triggered because of this buyback announcement. What kind of acceptance ratio will be there, and then this is the trigger for the stock for the near-term momentum. But overall, if we look at the structure since last couple of months, the stock is very stable in terms of price action. Stock has recovered quite well from its recent low. So looking at overall structure, we do believe if at all stock corrects from current level towards 35.50, 35.20 level, it's again buying opportunity to buy the stock for long term basis also. But yes, on the higher side, 36.60 is the key resistance area. If stocks process 36.60, then I think this recovery trend may continue further higher. But I think price hangover is going to remain as the buyback prices is already announced. So I think most of the arbitrage traders, those who wants to participate in this buyback action, so price is likely to remain in sideways consolidation for some couple of week, and then once this buyback is done, then I think again stock will come back to its normalcy, and then we can see a good uptrend in the stock as overall structure is looking bullish, and in decline we are ready to buy this stock around 35.50, 35.20 zone.
Fair point. It's been one of those wonderful rallies that we've seen as far as TCS is concerned. And if you look at the annual performance, remember this is a very heavyweight stock in terms of price and market capitalization. TCS is up 16% on a 1 year basis within the Nifty, and that itself is a fantastic performance. Okay, let's look at the pre-open markets again. Nifty settled at 19,822. The bank Nifty 54 points higher, 44,571. That's how the two major indices have performed. Let's look at the top gainers in both these stocks, both these indices, and then we'll take it forward. As far as Nifty is concerned, the top gaining stock is I think Hero Motors. Let me just rephrase this setup. It can't be Hero Motors because that was the top gaining stock yesterday. 1 second please. It's Divi's Lab, 37.99. Like I pointed out, it's going to be a pharma day when it comes to strength for the bulls. One very quick view on Divi's Labs, Rajesh, and then we'll get Vineet into this conversation.
Yeah, I think recovery is there in most of the pharma space in the last session also, and I think we have already mentioned about Arvindo Pharma. Divi's Lab is recovering from its recent low. Almost now, stock is trading about to its 50-day moving average. That clearly indicates that near-term strength is coming back to the stock. I think if stock crosses about 3800 level in today's session, then possibly this rally can extend towards 3860, even 3900 level also. So I think consolidation is likely to over at this point, and I think one should remain on the buying side of the trade. 3760 is now a stop loss, as the indicative tick is suggesting that we are opening around 3800 level. So I think if it's open around those level only, then one can keep a stop loss of 3760, 3750 to hold long position. Another 50-60 rupees up move we can see in the continuation of this pullback.
Fair point. A very strong balance sheet we need, and the API market is back as far as Divi's Lab is concerned. The counter hasn't done anything for the last 1 year, 6 months, a quarter. What would your estimate on Divi's be? Would you track this?
That the entire pharma space is expected to do really well, and our view is that the IT would be a sector which would be more of a down to consolidating sector. So if you need to take a exposure to the overseas markets, I think pharma is a better play, and DVs, because of its CDMO CRM kind of applications and being into the API space, should do very well coming from here. It's consolidated for a long time, so there could be a bigger outperformance coming in from the stock.
Okay, let's, ladies and gentlemen, again look at how markets have moved. Okay, HDFC Bank is opening 0.5% lower, 1529. Reliance is opening 0.22% lower, 2340. Infosys is flat at about 1497. There are losers in the form of Bajaj Finance down, Hindustan Unilever down 0.3% at 2547, and of course TCS now in pre-open trade settling 0.8% higher, 3640. ICICI Bank up, SBI up. So banking and pharma are most likely to help the index on its way up on weekly expiry day. Markets have opened, ladies and gentlemen. Let's look at the first tick on the Nifty. 18 points higher at about 19,830. Remember, the first resistance is at 19,848. It's the weekly expiry. We already have 3 days of gains in front of us. The Bank Nifty hits a century in opening quotes, 106 points higher, 44,628. It's a red tick on the Nifty IT index, down 135 at 32,412. Let's look at TCS immediately. Earnings haven't been taken well by the market, down 1%, 3570. How about Infosys, down 0.2%, 1492. Let's look at heavyweights. Flat on HDFC Bank, 1541. Reliance flat, 2346. How about the other two banks? ICICI Bank flat again at 952, and Axis 1023 up 0.4%. So this is how the markets have opened on weekly expiry day. Let's shift focus immediately to FNO stocks beyond the index heavyweights. Where do you see green? Rajesh caught it very well. Aurobindo Pharma 920, 2.2% higher. Delta Corp 1.75%, 145.50. BPCL 1.7% higher, 348.10. Hindustan Copper and National Aluminium. It's the metal space that's sticking very well. Hind Copper 155.35, 1% higher. National Aluminium 1.4% higher. Let's shift focus to NSE 500. Let's see what markets are thinking. Aster DM, again a hospital chain, 345 in front of me, 6.5% higher. Fresh record high on PCBL, Philips Carbon Black, 2.9% higher, 202.50. Let's shift focus back to the PSU segment, and let's look at stocks that are outperforming there. The PSUs, okay, it's the top gaining stock is manganese ore, 3% higher, 236. We have GMDC 1.4% higher, 390. and we have Chennai Petro 1.4% higher at 516. Let's look at the defense space. There is nothing much happening here. Let's look at Mazgaon Dock in the green 2150, Garden Reach in the green 805, and how about Cochin Shipyard flat at about 1046. Let's touch base with Rajesh Palvia immediately. Rajesh, 19,835 on weekly expiry day, up 22 points on the Nifty. Anything you would want to do initially? It's the fourth day of an gap up, and the fact that we are sitting on weekly expiry.
Well, I think opening is slightly muted at this moment. I think follow-up buying action is still absent, as already we have seen a third day of rally. So let's wait for another 10-15 minutes. I think if Nifty crosses 19,850 mark on the spot, then possibly we can see some follow-up buying action. So I think one should wait at this moment. I think let the market to settle let the market to absorb all the profit taking selling pressure in the opening tick, and then we will again review it in next 10 minutes.
Okay, the PCR will fire a chart of IndusInd Bank, and we'll get a very quick comment from Rajesh on this one. The RBI has allowed SBI Mutual Fund to buy up to 9.99% stake in Indus Bank. Remember, individual holders are not allowed to buy anything above or around 10% in any bank in India. That's a guideline by the Reserve Bank of India. So permission given to SBI Mutual Fund to add up to 9.99% in IndusInd Bank. It's the top gaining banking stock. Rajesh, IndusInd.
So Shailji, stock is comfortably holding above 1400 level since last couple of trading sessions. So I think that's the important level to watch for on the near term as well as on the short term basis for IndusInd Bank. I think if stocks continues to hold above 1400 level for next couple of trading sessions, then possibly we can see some rally towards 1480, 1490 zone for the stock. Overall structure is on the bullish side. Buy on dips is the strategy. 1390 should be the stop loss to hold long position on the IndusInd Bank.
Fine. That's what IndusInd Bank is doing, and I wish I could ask Rajesh on Axis Bank, but he'll beg off simply because he's a part of that overall structure. But Axis Bank is also doing phenomenally well, as also is Zomato. Rajesh, immediately a view on Zomato, 112.15. It's a breakout there.
Yeah, very strong buying action since last couple of weeks for the Zomato, and I think this trajectory has changed. Now stock is outperforming, and looking at overall structure, I think stock is likely to continue furthermore upside from the current level also. For positional basis, so we are bullish, and we expect that 135, 140 could be the possible target on the positional basis. But those who are buying this stock for the trading perspective, I think they can hold on, and even they can buy at the current level. The long position should be hold with stop loss of 108, and I think the immediate target on the higher side can be seen towards 120, 124 mark.
Fair point. So that's the first 5 minutes of technicals for you. Let's get Vineet back into the conversation. Vineet, the markets have opened fairly stable. It's a flat move on the Nifty and a slight uptick on the Bank Nifty, mainly because of ICICI, Axis and IndusInd. Is there anything that catches your fancy in pre-open trades?
I think Zomato, as you mentioned, with the World Cup around the corner, I think there is a lot of momentum in that, and that should head 15-20% higher during this quarter, is my view. And we have coverage on the stock. We believe the stock can trade at around 150, 156 over the next few months.
Okay, so that's how Zomato is structured. It's doing fairly well on the charts, 112.50. The other stocks that are at the moment moving in the broader markets, let's look at them. It's about 5-7 minutes of trade. Okay, it's Exide Industries, 267, 1.7% higher. Rajesh, your quick view on Exide Industries.
So, looking at overall auto ancillary sector, we are bullish, and looking at the structure for Excite, this is the third day where stock is showing good strength. Follow-up buying is happening. Stock is now trading about the 50-day moving average. Looking at the buying action, yes, we do expect that this momentum can extend towards 275 to 78 zone also. So, buy is the view for Excite at the current level also, with stop loss of 264. It's looking very promising, and I think the auto ancillary is the sector where we feel that momentum is likely to continue further, and the overall structure for automobile stocks are on the buying side.
Fair point. Before we thank you, Rajesh, one very quick view on GMDC, fresh record high 412, the stock just taking it away.
I think, Shailji, this segment, mines and minerals are looking very promising. I think you discussed about MMDC also. NMDC is also looking promising. GMDC's unstoppable rally is taking place in the stock. Almost in a month time, we have seen for this month itself a 30% kind of rally. A very strong buying interest, even at a higher price. Stock managed to give breakout of its multi-month. Almost stock is now breaking out above its 2007 swing high. So that is giving us confidence that multi-year, multi-month breakout is very strong, and I think this momentum can extend towards 480-500 zone also for GMDC. Even one can look at NMDC also. That stock is also picking up, and I think 158, 160 could be the possible target for NMDC also in the near-term basis.
Fair point on GMDC, which is at a fresh record high and very strong momentum coming in. Rajesh, with that, we'll thank you for the wonderful time spent with us over the last 10-15 minutes, and a fabulous call that came in from you as far as these stocks are concerned, especially Aurobindo Bharma. Thank you so much for your time, sir. We look forward to you joining us again fairly shortly. At the moment, ladies and gentlemen, the Nifty is in fine shape. Remember, it's the weekly expiry at about 13 points higher, 19,823, and the Nifty Bank 44,662, 146 points higher. It's the IT index which has slipped a bit, and that's mainly on account of a mild disappointment, if you would say, or just profit booking when it comes to the earnings of TCS. It's the top loser at the moment in the IT space within the F&O basket, down 1.1%, 35.74. The management will be joining us shortly live on Business Today to discuss what has been in the past 3 months and what is likely to be over the next couple of quarters. A lot of strong traction coming into the markets as of now. While the Nifty is flat, the action is there in the NSE 500. We just mentioned fairly strong moves coming in the PSU banking basket. The PSU basket led by GMDC, now up 8%. Remember, this was a stock that had hit a 20% upper circuit day before yesterday. So the rally is unstoppable here. The entire metal PSU pack is booming with numbers. Manganese ore 4.5% higher, 239. We have Kudremukh oil mines 1.3% higher, 326. Hind copper 156.25, 1.56. NMDC 1.5% higher. This is how stocks are moving, and it's Axis Bank that's taking it away within the large cap space, 1% higher, 1029. Vineet is still with us. Vineet, before we let you go, one quick word on Axis Bank.
I think Axis Bank is a dark horse among the large cap private banks. I expect it to outperform, and it can easily put on another 30-40% from the current levels. So, of course, our target is over for the next 24 months.
Fair point. And with this, Vineet, thank you so much. 2 picks we'll remember from you. A 2-year target of 14,000 on Maruti Suzuki, mainly on because of internal accruals, funding and expansion, and of course Lloyd Metal and Energy. This is one stock that Vineet hopes will double in a year. Again, the same reason, internal accruals, funding a 2,300 crore rupee expansion plan. Shortly, we'll be joined by Siddharth Zarabi, managing editor, Business Today Television, and he'll take the conversation forward with the TCS management as far as the post-mortem for earnings are concerned. Good morning, Siddharth. What a pleasure to host you.
Morning, Shail, and very nice to be joining you. I was listening to some of the conversation that you were having, but clearly IT and
I think we'll have
TCS.
to fix up Siddharth's voice connection. We'll do that fairly shortly. Siddharth, can you hear me?
I can. Good morning, Shailinder. How are you?
Okay, wonderful. What did you make out of TCS earnings? What have been your initial thoughts?
Well, I think it's a bit of a stumble on account of some economic concerns. Basically, the company is grappling with a slowdown as clients have cut back spending. But very clearly, the big news is the buyback, Shell, and that is what the street was looking for. The 17,000 crore buyback, Shell, as we know, has been announced by the company.
Fair point. And Siddharth, it's always a sell on news as far as markets are concerned. And now that everything that was supposed to be known, especially the buyback size as also the price, has been known to us, it's a slip as far as prices are concerned on the market. It's just down 1%. But TCS has been one of those wonderful outperformers over the last 1 year. If you see, it's a hugely large company in terms of market capitalization, the second biggest in the market after Reliance Industries, up about 16% on a 1 year basis. And let's see how it shapes up. TCS over the last 5 or 6 years has done a remarkable job in creating a lot of wealth for investors, both in terms of stock price as also the net profit. Over to you, Siddharth.
Thank you, Shail. And just to add one quick point, in terms of the employee size, I was reading commentary yesterday that at 6 lakh plus, it's much larger than many state governments as a company. But thanks for that, Shail. And at this stage, let me welcome Mr. N. Ganapathy Subramaniam, the Executive Director and COO at Tata Consultancy Services, who joins us live now. Welcome to the show. The headlines clearly talking about how there's been a bit of a stumble amid economic concerns as clients cut back on spending. Would you agree with those headlines?
Thank you for having me. It's always a pleasure to connect with you and your viewers. It's been a muted quarter from a revenue perspective. I think the macroeconomic situation and the geopolitical changes that are happening by the day meant that clients are a bit cautious about what they want to invest in, what they want to spend in. That created a muted revenue growth for the quarter. But however, we are pleased that we have improved the margins sequentially by 110 basis points, and also a very strong order book in terms of the large programs, large deals at 11.3 billion came out much ahead of our own expectations. So overall, it's a good execution, disciplined execution from TCS in some trying circumstances. That's the way I will put it, Siddharth.
How long do you think these trying circumstances are likely to prevail?
It's very hard because even the economists are saying, I think, listening to your channel where one of the economists actually pointed out that the economy itself overall seem to be resilient to recessionary and inflationary challenges. But however, the growth has been muted. And while growth projections have come for many markets, they're all below the historical average that they're all used to. So in that sense, that there are going to be a certain amount of uncertainty. So our customers, what they are looking at right now is, if I'm going to go with a proposition or any project which is going to give a return on investment, which is very visible in, let's say, a quarter or two, then they want to execute those programs, right? While they continue on the long-term commitments that they made and they have not passed the long-term projects that we are executing. But then if I'm going to go with a proposal which is going to have a, let's say, a return on investment is going to be over 4 quarters or 5 quarters, then, clearly, they are not on priority right now, right? Understandably, because, of the macro uncertainties and everything happens. And from our own TCS perspective, we calibrate our plans, our hiring plans, or what we will do internally and externally. We calibrate it on a 15-day basis.
Your EBIT margins have come in at 24.3%. What's your outlook for the remaining 2 quarters?
I think, if the top line is under somewhat of a stress, then it's important that we also look at the efficiency side of it. So we took some clear-cut actions in terms of improving the productivity, improving the utilization, cutting down on contract staff as opposed to, when we have a bench which is reasonably secured, reasonably high, and we trained all of them. So we replaced some of the contract staff. So those efficiencies levers is something that will continue. And that has delivered 110 basis points, and there will also, there's a good chance that we will continue that in Q3 and Q4. So overall, margins should improve from where we are. But at the same time, what's going to pan out in Q3, which is a seasonably a weak quarter, with the furloughs, the number of working days being less, etc., is a challenge. But growth is as much an enabler to improve the margins, like the other parameters that I talked about.
Your order book has stayed strong, and you have also increased the guidance to around $9 to $10 billion. This was also the second highest TCV ever in a quarter. Which vertical drove this growth?
It's quite broad-based in terms of the overall order book. I think, 2 mega deals, the one from JLR and the one with BSNL, both are a little above $1 billion. So that they constitute the mega deals. But then North America clocked about $4 billion. Banking financial services clocked about $3 billion. The consumer group, which constitutes retail, travel, hospitality, and CPG segments, that constituted about $1.3 billion. So I think overall, I think it's fairly broad-based across markets and across verticals beyond what I said.
And how does the pipeline look like for the future?
Pipeline looks good. Look, when these are large deals, when we look at it, they take about 12 to 18 months to shape. The qualified pipeline that we have in major markets as well as emerging markets is quite strong. And we are working on many of those opportunities. And I think we are confident of good deal conversion. For the value propositions are clearly embedded with our new offering, which is we launched AI.Cloud, which actually brings about cloud, digital technologies, artificial intelligence, deep learning, all of that together under one bucket. So which is actually being received very well by our customers. And we are putting that in the center of every opportunity that we are qualifying and the value proposition that we are crafting to our customers.
On a geography basis, the UK market was up 10.7% annually. When do you see the North American market kind of returning to its past glory?
It's difficult to say, and because it's a huge market for us, almost 50% of our revenue comes from North America. So in that sense that we are waiting and watching the turnaround in that market. Manufacturing industry per se, it's done well and for North America. But banking, there are, while the banks' results themselves are good, but then there are sentiments on banking sector, which are whether it is related to savings or whether it is related to mortgages, they are not looking very positive. So the banking segment really looks at a certain amount of caution. The essential retail, which always did well for us, we saw some softness in the last quarter, but hopefully that should turn around given the festive season that is ahead of us, right? So we'll have to wait and see. But overall, manufacturing looks strong in both Europe as well as in North America. Retail, we have to wait and see. And then travel, hospitality, we hope that it will also turn around in the during the festive season and the holiday season ahead.
You are one of the largest employers, and I was reading some commentary yesterday which said that at your current employee size, you are larger than many state governments, and obviously this is a good way of analyzing your headcount numbers. But the headcount numbers seem to have declined by over 6,000 in the second quarter, and as far as the attrition, it's at 14.9%. So, what is the outlook as far as hiring is concerned? Is this a stable number that you will be at for the rest of the year?
See, we continue to hire and we continue to hire the talent that we need. But if you really look at that 6,000 net headcount drop, this is nothing to see as a layoff or anything that we did. It's predominantly during the last about 12 to 14 months, we hired a lot of people, a lot of people from the market laterally as well as freshers. They all went through the training, they're all ready, and we have a bench at strength, right? And as you know, every quarter we calibrate the lateral hirings that we need to do based on the market demand and in addition to what we have. So, be that as it may, I think in the current quarter which passed by Q2, our demand, whatever we were able to fulfill majority of them through internal resource pools that we had. And we also had replaced some of the contract staff that we had with the bench strength that we have. So the net, in net, what happened is that, look, we reduced subcontractor count. We were able to fulfill the requirements that came in with the internal resources. We hired some lateral talent, and then there were natural attrition that people left TCS. In this quarter, the net attrition that happened in that sense exceeded the typical hiring that we do, right? In that sense that the 6,000 net headcount happened. But overall, there's nothing to worry about, and we continue to calibrate the workforce that we need, whether laterally or through freshers. Our freshers hiring program for 2024 remains intact. We have started going to the campuses and meeting people. So we continue to hire the right talent that we need. At the same time, optimize the bench strength that we have, improve utilization, and deliver a better margin as well as execute well, Siddharth.
For the record, since you mentioned campus placements, there were some reports on delays, and that was not just for your company, but broadly across the sector, and also questions on variable payouts. What would you say to that? Have full payouts been made, and all the offers that have been made, have they been fulfilled?
Firstly, I think, we communicate to all the people whom we hire certain date range, this quarter, this month, join us. I think, barring one or two instances where we had to push it by a week or two, largely that was according to plan. Every single offer that we have made to the freshers as well as the laterals during the year have been honored, and we'll continue to honor them. So our onboarding program is fairly intact. That's the first point. With respect to the variable pay for this quarter, 100% variable pay will be granted to about 70% of our workforce. The remaining 30% will be based on calibration of their individual performance, revenue performance, and so on, which is typically the case for us in every quarter.
Absolutely. And one of the other points that I want to pick up on this matter, the last one on the human resources aspect, is the shift to from hybrid to back to work. What can you say to all those people? Because this is something that has been closely watched in the workforce all across India.
We have been working with our employees and advising them to come back to offices. There are multiple reasons for it. I'll just step back and tell you, Siddharth, that when the pandemic struck, we enabled working remotely for all our employees within a matter of about 10 days, right? So our processes and systems, whether it is security or whether it is continuously, we innovated as far as enabling people to be contributing and to the growth of TCS, contributing to the projects in which we are working for our clients. All that remained intact. Having said that, what happened was that in the last about 6 quarters, a number of people left TCS. The industry had a huge, you all termed it as a great attrition. And a number of people who joined TCS were also huge, right? Close to about, let's say, roughly 150 to 200,000 employees have joined TCS afresh from the market, either it is from the universities or otherwise. So in that context, what we felt is that it's important that they all come back to work, come back to the offices, work with the senior colleagues, understand the TCS culture, understand the TCS way of working, how client interactions take place, how some of the labs that we have within the campuses are typically used to prototype and craft solutions quickly and then position it and demonstrate it to the customers as the overall value proposition. All these things matter. And we felt that, look, given the workforce that the fresher workforce that we have in fairly large numbers, we felt that is the right thing to do. So we have asked every one of our employees to come back to office 5 days a week.
Wonderful news there, and thank you for setting this record straight. I want to talk about the outlook that you feel as far as currency trends are concerned. Your constant currency revenue growth is up 2.8% year on year. What do you visualize happening?
We would like to grow, no doubt about it. We are all focused to grow the business. And as I said, the order books look strong. But in any quarter, what happens is that there is a fixed base of work that we currently doing. In this quarter, for example, what happened was a couple of large transformation programs that we executed, they got finished. So which essentially meant that, look, typical revenue that we accrue from that project goes away and it needs to be replenished sufficiently with the new deals that we are winning. And in addition that, the existing projects continue to get optimized. Our customers look for what we call as the run the business, bring in automation, disrupt yourself, automate it, so that, it's like, milking the run the business to feed the change in the business. That's the concept that we all practice. And while doing so, while we are milking the running the business and giving the savings that are required, that savings need to be invested at the right way in the new projects that are coming in, wherein, there are certain caution that people exercise. As I said, if the return on investments is anything more than 2 quarters, then, say, hey, really, do we need to do it now? That question comes in. So in that extent, that new pool of smaller projects that we do by creating our own savings and then investing it into the new, that is the element of lull, I will put it this way. And that's consistent with the view that the economy is limping ahead, not sprinting. And when it starts to sprint, we will all take much stable positions on new projects that will come through. So net, I think, overall, we are glad that, we have not degrown. We have remained flat on a smaller growth in the particular quarter. Q3 is again, a little challenging, but we should manage all these levers to deliver to our stakeholders a real value.
A quick point, I was noticing this number that's been put out, Gen AI, a generative AI ready workforce of over 1 lakh. What are they going to be doing? That's a sizable number.
Yeah. See, the thing is, the general thinking is AI is for real. It's not something that is we play only, right? AI is for real, and that's going to be at the centerpiece of every technology or every architecture that we want to roll out, right? So we were all focusing on building skills around AI. How do we write algorithms? How do we make these algorithms stable and responsible, and move that algorithms to more machine learning, deep learning, so that it becomes embedded into systems and processes that we deliver to our customers. Then comes generative AI. Generative AI lifts the ball to a different plane, right? And all this requires enormous amount of training. And if you are going to be doing projects in which, every project AI or Gen AI is going to become the centerpiece, then we need the resources and skills to meaningfully deploy that, meaningfully deliver those solutions. So from that perspective, we took upon a project to train about 100,000 of our employees who probably already know something about AI, but then, how do I lift them to generative AI? So we're happy that we trained about 100,000 entry-level AI skills are there embedded into them. We also launched a platform called AI Playground, which allows people to come in and then try out the generative AI technologies. So all the large language models are there. All the toolkits that different startups have come up with are available, or hyperscalers who have come up with are available. The computing infrastructure involving AI chips, etc., are made available into this whole platform. So we are having all our employees having access to it in a secured way. They can try out different technologies so that they can meaningfully deploy and have interactions with customers which are good. Using these opportunities, what we also did during the quarter is to catalog about thousands of use cases for different verticals, which are really helping us to take it as a basis for discussions with our customers as we craft our generative AI value proposition.
As I let you go, just one quick final point in our conversation today, and this is the big news that the street was expecting, which was the buyback. It's come in at 17,000 crore, 4,150 per share. What's your message to shareholders?
I think, we have our capital allocation policy is very clear, and that almost 80 to 100% of our free cash flow is something that we will always return to it, to our shareholders. I think we have been consistently doing this. There are several instruments that are available to give that money back, and some are, things like special dividend is one, and then buyback is another instrument. So whichever we feel that is most appropriate to do, and which is healthy for our stakeholders, is something that we consider, and we keep doing it. And this time we chose to do this, taking into account some of the regulations that have been put in forth. So 17,000 crores is the value that we have earmarked, and we felt that 15% is a reasonable premium to be offered for buyback, number one. And it's a way of actually meeting our own policies of returning to shareholders the free cash flow that we have.
Absolutely, and shareholders would be delighted with this. Mr. Subramaniam, thank you very much for your time with us today and kicking off the coverage that BTTV is doing on the $250 billion plus Indian IT industry. Thank you very much for your time with us today. Viewers, with that, it's a wrap on our morning edition.
Thank you, Siddharth. Really great having you with us.
Bye-bye. Bye, sir. Take care.
Bye-bye.
And with that, it's a wrap on this show. We'll be back with more. Until then, goodbye.